In this video, we're going to talk about how to identify high probability setups following price action rules, and we're going to use price action rules to help us properly identify market structure. Now, what is the market structure in front of us? We can see that the structure is weak bullish uptrend. It is a weak bullish uptrend because it has a trading range-like feel to it. We have move up, move down, move up, we're moving down, so it has flatter EMA, it has up and down moves. It's going fairly sideways, but we can still see that there is a bullish bias present. Lows are higher and higher than the previous ones, so we have to stick with the longs. For that reason, I'm going to identify a bullish channel because price action is always following some form of a channel. Market geometry is being used, and these candles are never alone on the chart. They're always following some form of a pattern. If you're a skilled price action trader and you understand to read the price action, you are aware that the prices are always following some form of a pattern. Now, I'm also going to identify the low of the day and the high of the day key level because they may come into play. They are important key levels that use as a target, and they are important key levels. Now, we had a pullback lower, a little bit bearish correction. I have to draw the downtrend even for the bearish correction, but market strongly push up, which is indicating bullish momentum, and according to trendline rule, this is the first break of this uptrend, so I expect new high to be formed. I'm following the simple trendline rule, big uptrend working to the upside. First break, I need to get new high for the uptrend, and I expect even the new high for this short-term uptrend, which will keep me on the right side of the market. Now, this is where market open and prices are correcting lower. So at this point on, since the bias is bullish, I want to go long, but I need to go long only after it is safe for me to go long. And how do I determine it is safe for me to go long? After the bearish correction plays out. And the bearish correction played out with the break and a new low for the downtrend. There's a downtrend working lower, break, new low. We have a new high where we set the count, and we have first entry long, pullback, second attempt to go long because this is the second bar we triggered above. Now, second entry long with the right context is a high probability setup. But here I'm still below exponential moving average. So I cannot go long just yet, even though I expect new high for this main uptrend. For the reason, I want to be patient. And notice what is happening. Prices are going sideways a little bit more, a little bit longer. And I can see that sellers are about to get trapped. Because this is new high, first entry long, second entry long. And sellers are looking at it as a failed second entry long. They see that this may be a long trap, but this is not going to be a long trap because bias is bullish. Each new low is higher than the previous one, so sellers are the ones who are going to get trapped going short too early after downtrend played out with the break and new low. For that reason, this was my justification for taking this high low. It is a little bit aggressive because at this point on, it's getting a little bit stacked, but it's a nice bullish bar, and you figure that all the sellers got trapped going short too early. I had to ride this out. Okay, my stop loss goes one tick below the signal bar, and you can see I was one tick away from getting stopped out. This is why we're using price action structure to help us protect our stop. You cannot put the stop loss in the middle. You cannot monkey with it. You always have to leave it one tick below the signal bar when going long and one tick above the signal bar when going short. So you would have survived this. Eventually, prices created a scalp. After that, the congestion started to get more prevalent. EMA got really flat in the middle of these bars. So this is a congestion. We have breakout to the upside and breakout to the downside. This congestion works the same way as a small trading range. And according to trading range rule, you want to fade the breakout. Most breakouts will fail. You don't want to fade the breakout to the upside because you would be selling, and that is against the main bias. However, if there is a failed breakout to the downside, it is right now with the overall bias, and it's a failed breakout, nice bullish bar. You expect new high to be formed for this uptrend, even the short term one. So bias is bullish. This is a failed breakout, a little bit more advanced trade because it takes a little bit more experience, because it is always hard to sell after so many pushes lower below EMA. But if you combine a bullish bias with the failed breakout, advanced chart reader can enter along here. Now prices are pushing above EMA, confirming bullish momentum, and eventually new high has been reached. Which means after new high has been reached, the trendline rule played out, and it's time for correction or possibly reversal. Okay, so for that reason, you cannot go long. At the same time, I have this resistance active, and I expect for prices to pull back below the EMA and give me failed second entry long reversal pattern. Why do I wait, and why do I need to get a failed second entry long reversal pattern, and I'm not just picking top, failed breakout, or lower high? It is mainly because we have still bullish imbalance present. Each new low is higher than the previous one. I'm going to draw it just to visually show. You can see that there are still lows forming higher and higher than the previous lows. There is still some bullish momentum. If this was healthy trend range, you can pick a top here or take potentially lower high, because trader took this lower high and the idea was not wrong, just the timing was a little bit off. But the timing was off because trend range was not healthy. There was still bullish bias, even though the highs are static and we have the key level. For that reason, you really need to wait for the failed second entry long below EMA. You cannot just pick a top like this, because this can happen. Unfortunately, you can get stopped out just to watch it go exactly where you thought it was going to go. But market keeps pushing lower and it's time for potential correction or reversal. But notice what is happening. If prices are going to come from these highs back into the trend range, and if this downtrend is going to be strong, you're going to get something like this. You're going to get to like a pullback, EMA is going to hold, and you're going to create new extreme. The fact that you strongly push above EMA is indicating something is different. And it even made me to look for potential channel like this. I was even trying to find a channel like this because it really looked like it fits after such a strong bullish spike. This bullish spike indicated that the series of higher lows is still continuing and there's still residual bullish bias. If I want to sell, I want to see prices being rejected by the EMA and show me some sales momentum. I don't want to sell when prices are pushing above EMA like this and it basically keeps pushing higher consistently. For that reason, I don't want to go short. I cannot go long though, because I would go long directly into these highs after uptrend played out. So this is area of indecision. There is no entry. By the way, the news came out around this time right here. This is the big bearish bar. This is the news. So you never want to be trading around the news, but big spike down happened. And it looks like the momentum may shift, but it suddenly changed and there's another big bullish reversal. So at this point on, you have to take a step back and reanalyze this trend range, because the bottom of this trend range is completely empty and we're basically at the top portion of this trend range, at the upper half of this trend range. And I can see that the lows are bouncing here and they're not making lower. So there's probably a new trend range forming and prices are always following some form of a pattern. So this is the pattern right now being formed. And this is a trend range right now, which means I'm following short-term channels. And here we have a conflicting beliefs, because either this downtrend is strong and after a break you're going to get new low, or this support is going to take precedence and you're going to push higher after such a strong push up. Now, what you do in this situation, if you're not sure, well, if you're not sure, you're not going to pull the trigger, because you never want to be gambling. You always want to be sure you're reading the price action correctly. You may read it wrong, and that may happen, and it will happen, but at least you're not gambling and you're not taking a chance, because sometimes deep down, you know, you're trying to gamble, you're taking a chance, you're not really sure, result into a losing trade. So we have a second entry short, but since the bias is a little bit unclear, because this was a strong bullish spike up after double bottom, you can get potential failure, failed second entry short, and you can get trapped and market can continue pushing higher. For that reason, once second entry short is pushing below EMA, this would be perfect time to wait for lower high confirmation. Lower high that would confirm the second entry short, would confirm the EMA, the overall bias. There was no tick higher. There was no lower high that would trigger above this bullish bar, reverse down, so there is no entry right here, and you're just being patient and you see market eventually pushing higher. Now market is pushing higher again, so there's a little bit of a bullish feel. I'm drawing my trend lines. I have a break new high. This is a tempting entry right here, because uptrend played out with the break a new high. Great bearish bar. The key entry point is holding prices. You know what, you can go short here. I will mark it. It's a little bit advanced, but it is a decent entry to take a chance on. Great bearish bar. You're probably going to pull back the exponential moving average, and right now you're playing this trend range. However, once you get another break and a last big move up, now you have a failed breakout above this trend range, which you can sell again, because now you have a break new high, another break, another new high. So definitely a decent entry. And then you have a lower high that is confirming the failed breakout. You know what, I have to mark this setup now that I'm looking at it. From price action perspective, uptrend played out with the break new high, another break, another new high, and the lower high that is confirming the failed breakout. Both of these sells are quite strong. The resistance is clearly strong here. You're probably going to pull back lower, especially after this lower high confirm this failed breakout. Now prices push strong below EMA, and we have new high, first entry long pullback, second entry long failure. Why we want to see second entry long to fail? Because we're coming off the failed breakout and we want to see prices reverse. So any second entry long is most likely going to be a trap because we're playing the trading range rule, which means we expect for prices to go from the top all the way down to here. But first second entry long had a horrible signal bar, but notice what formed next. New low, first entry short pullback, second entry short. It is a continuation of the failed second entry long. EMA is holding, trend line is holding, the resistance is holding again, big bearish bar. I took this trade right here and it stopped me before eventually turning down. So this was a losing trade on my part. It's getting a little bit stacked, but I'm always going to try entry like this when I have so many factors in favor of trading, because there's always something to worry about on every single trade. Every single trade you take, there's always something to take into consideration, and your mind will try to talk you out of this. Trading is about taking probabilities, and you're taking a chance on every entry. You're like a casino that has an edge on its size, and casinos only make money if a lot of customers keep gambling for a long time. For that reason, we have odds on our side, but we need to keep taking these entries so we put odds on our side. If you keep cherry picking too much, if you suffer from analysis paralysis, you will never get the odds on your side. So for that reason, so many key entry points holding, so many factors to take a chance here, and it was just a losing trade. Now I don't see any entry after that. Market continue pushing lower. You have a break, new low already here. If there was no break and new low, this second entry short would not be so bad. But if I follow the rules and I draw the trend line tightly, that is nicely fitting, the candles are fitting inside this channel, you already have a break in new low. So I really want to bend the rules here. Second entry short. Yeah, I'm not really going to mark this entry. The market strongly pushed above EMA. The momentum is changing. You're strongly pushing above EMA, and there is a high low. The reason why this high low is decent, because you have two bars next to each other with a great bullish tail. Already this bar looks almost like a good high low, and this bar right next to each other confirmed that this is truly going to be a high low, another strong bullish rejection, because this bar looked very bearish, and at the very end of the bar everybody started buying. So this is indicating that there's strong bullish momentum. You're above exponential moving average, indicating bullish momentum. This uptrend is in place, so it needs to get new high probability setup. Now there is a break, move to a new high, break, another move to a new high. And I took this failed breakout right here because the resistance was still strong. The reason why I liked it, because it looked like a depletion and you were so far away from exponential moving average that you can almost bet that you're going to pull back lower to test this breakout area, because this is an important breakout area and these key levels will get tested and there will be a pullback to test it, and prices will react. You're either going to reverse up if it's going to hold, or you're going to pull back into this trading range. For that reason, I really like taking a chance here on this such a nice bearish bar when you're so far away from EMA and prices pull back. Okay, so when I see this, I'm paying attention to what the key level is going to do. It's either going to hold or will not. In this case, it is holding and you're pushing higher. I don't see good high low or failed second entry short on my chart. It's really not looking great here, but as prices are pushing higher, this is where I'm going to identify a wider channel, because once you're watching this, you can see that prices are moving away from this trading range and the new structure is starting. Okay, this was the last failed breakout that gave sellers the chance to reverse the direction of the market and pull back into this trading range. The fact that the exponential moving average and this key level are holding here so strongly and prices are pushing back up, new uptrend is starting and prices are not coming back and buyers are in effect now. So the bias is bullish and our job is to only stick with the trend which is now being established, and is to only look for high probability setup to go long. And high probability setup to go long is a second entry long, higher low, or failed second entry short. Because any short, second entry short that goes against the main trend is going to be considered a trap. We have a new high form. I always going to reset the count after new high is formed. And we have a first entry long, pullback, second entry long, downtrend in play, so many bars stacked. I don't think I want to go long here. It worked, but so much stacked bars, really they are cramped up next to each other. You will want to see high low, always want to see high low when the bars are so stacked up. Then you create a new high, but remember, even though this uptrend has new high, this is still very looking bullish. So after downtrend played out with the break in new low, and you have new high, first entry long, you are waiting. But once you get a second entry long, First leg down, pullback, second leg down, basically measured two-legged pullback. And this support is right now holding basically a little failed breakout, or if I'm going to move it a little bit lower, it's acts a little bit like a triple test. Technically, it is slight little failed breakout, and this is a second entry long, two-legged pullback, and downtrend played out with the break-in new low here, and already break-in new low. So odds, and by the way, you wouldn't have this trend line. You wouldn't have this trend line at the time, but this is still nicely bullish. Notice how EMA keeps holding every single time, and the structure is starting to be now bullish. So this would be a great entry, had the signal bar finished bullish. It looked hopeful, but once the bar was ending, a lot of people started selling, and it gave you this big bearish stim. Half of the body is a stim bar like this. So that's the only thing I don't like about this entry. It was very close for us to go long here, but it is an aggressive entry. I'm marking it as aggressive entry with this signal bar. Then you get higher low, also has a bad signal bar, and it's right now in the middle of this trend range. So you want to be a little bit patient. After prices are pushing higher, you can see that clearly this initial uptrend now has a break new high, and multiple new highs, multiple new highs, multiple new highs. And when you see multiple new highs like this is telling you there are probably bigger and wider channel in play. So this fits really nice because you get multiple confirmations right here. It fits off the top, so kind of like a spike and a channel formation. And at this point on, structure is clearly bullish. Why? Because EMA is pointing up, higher highs, higher lows, and only thing you do is you wait for two-legged pullback at the key entry point to go long. That's the only thing you wait for high probability setup to go long. You're not interested in chasing the market. We have new high, first entry long, second entry long. But notice you have basically, if I'm going to draw a small little trading range here, you get like 20 bars working completely sideways. So many stims, stim here, doji here. Context is perfect, but it's looking like trend is losing steam. It may create a little bit trap, a rollover before going higher. Not a bad entry, but a little bit more aggressive. Here is the better entry, new high, first entry long, second entry long. Trend at this point on is too strong, and notice the two-legged pullback high probability setup, double bar entry, second entry long, and you see that you have potential overshoot. But is this a overshoot? Because you would expect after overshoot for prices to push lower, but it's not happening. You get another overshoot, another overshoot, another shoot, and this is not a overshoot. Overshoot is steep erratic move, and if you don't get overshoot on the first go, meaning strong bearish momentum, there's probably a stronger uptrend in play. And look at this uptrend. This is a clearly strong uptrend. So you are not afraid of this overshoot. This looks like there's probably a brand new, slightly steeper channel being developed because everybody's starting to buying close to the close of the market. And right now you have new high, first entry long, pullback, second entry long, high probability setup. And you even get high low confirmation of the high probability setup. I can even look at it as a first entry short, second entry short failure. So we have a nice bullish bar here, and we can see that we have new high, first entry long, actually first entry long, pullback, like a second entry long here, but you don't never want to be trading so late it worked. But you guys can see how two-legged pullback looks, and this is pretty easy trading when the uptrend gets so strong. Unfortunately, it happened at the very late portion of the day. You can see how slowly but surely bullish imbalance came into play and the new strong uptrend has started. So this is the bigger picture for the day. Once in a trading range, following the shortened trend lines, but still careful at selling too early once there are so many higher lows. But once the trading range gets proven, you can pretty much trade it both ways. Eventually new uptrend started, and at that point on, it's pretty simple looking for two-legged pullbacks at the key entry point, which is trend line, support, or the exponential moving average, which is serving as a key entry point. So I hope the video was helpful, and I'm going to see you guys in the next one. Take care, everybody.